And hello, everyone. Welcome to the Real Estate Show on KCMX News Media 880 and on YouTube at realestateshoworegon.com. I'm Pete Belcastro. This is Alice Lema. We're both real estate brokers with John L. Scott in Southern Oregon. We get together with you once a week here on radio and on YouTube to talk about our favorite subject that we like a lot, and that's Southern Oregon real estate. Alice,
Southern Oregon real estate. There's nothing better to talk about.
Yeah, what are you doing here the first part of the year? You're busy. My goodness. Well, you're going everywhere. You got buyers, you got sellers, you got everything going on.
Well, I think a lot of people just waited through the holidays, and now there's especially people that want to list their house and they're worried about the fires.
All right.
You know, we don't know if we're having fires, but they're in a hurry to get their house on the market.
We're going to find out how it is. This fellow here with us today is Jim Remley. Jim's the managing principal broker at John L. Scott. 11 years, is that about right?
11 years,
there?
yeah.
This is your beginning of your 11th year.
My 11th year.
Can you believe that? Is that fast?
It's gone by fast and slow.
So when you came here, all right, that would have been
2009.
All right,
2009.
What was the situation in the real estate market when you came here?
The market was deep and dark back then. Yeah, it was a scary time. But half the properties on the market back then that were selling were REO properties. They had been foreclosed on, and so or short sale. So it was all distressed property sales. It would be few and far between when we'd see what we called a happy sale back then.
Yeah.
We don't use those terms anymore. I mean, you see REOs and distressed properties are maybe 3 or 4% of the market today. Back where it's been, had been for my majority of my career, 30 years in the business. And we've, new agents aren't even aware almost.
Like, what's a short sale?
How would I do a short sale? What is an REO? We have to educate them on the market now on how that used to be.
You're absolutely right. 2009 in July when we started our show, Joe Brett and I, more short sales and foreclosures than regular sales. This crazy market, we're getting into. But how it's changed? My goodness, over these years, right?
Yeah. The market's cyclical. It comes back, and it's come back strong. I mean, that was a once-in-a-generation event. We saw the Great Depression. That was a Great Recession. We don't expect to see that. A lot of people ask me about that. Do you think you see another bubble coming? Absolutely not. I mean, this market is completely different than it was back then, and we have great, sound financial stability in this country right now when it comes to housing.
Yeah, it sure seems that way, and I agree with you. I'm usually the pessimist because she's the optimist here all the time.
And people are nervous, and it's an election year, and people are nervous about buying and selling houses, and it's hard to reassure them. So, what would you say to somebody that you could point out that's different now than was before?
So interesting. Right before the run up to the Great Recession, kind of driving off the cliff, so to speak, we had 11 months of inventory in the country. Today we have about 3 months across the country. So it's a supply and demand like any product that you sell. So when you look at a very low supply and a high demand, that's a stable market that we're in. We have no danger of driving off a cliff again. The other major difference, is lending standards are completely different than they were then. We don't have liar loans, so to speak, where people can walk in and get a loan and just lie about their income. Everything's verified and double verified, and there's a lot more regulations in place. So one example of that is we have no direct contact with appraisers anymore.
Everything's arm's length.
Everything's arm's length. Lenders can't choose the appraiser. There's an appraiser pool. It's all done at kind of a round robin kind of sort of thing where there's no choice involved. So you do definitely get independent appraisals. Sometimes it works against you in that you don't always get the best appraiser in that case, but certainly a lot more regulation has gone into the system. So it does protect consumers at the end of the day.
What do you think?
Well, I think that's great advice, and that's something I'll be passing on to my clients, too, that we have a stable economic situation and the supply and demand.
Yeah. Well, you've been calling about normalizing the market for quite some time.
Yeah.
And I think wasn't it last July or whenever you called it? Alice called that pretty well.
I make a lot of predictions.
Some of them are good.
I'm bold that way.
Some of them are not so good.
My crystal ball.
But you called this that it was the market was changing. We were going from really
from a seller's market,
kind of top to bottom to beginning to change that. Is that about right?
Well, it's interesting. The market in 2019 didn't turn out like we all expected. So if you go back, if you rewind about a year and 2 months ago, last November, December 2018, the interest rates had climbed dramatically. And Alice is right. We were approaching 5% interest rates, and it was like a wet blanket on the market. And in last December, our sales were half of what they were the previous December.
Whoa.
So looking forward back last December, I really was predicting that our market is going to go through a transformation, a change. And the Fed back then was saying they were going to raise rates 3 more times in 2019.
Oh, right, yeah.
So the Fed was saying, hey, we're putting a blanket on this. That didn't happen. What happened is the exact reverse.
It went the other way.
The Feds actually reversed course completely and actually reduced interest rates. There's a reason for it. They just didn't do it on a whim. A lot of people think it was under political pressure, but it actually wasn't. The reality is the reason why they reversed course was the trade war. So the trade war began to affect the world economy, and to address that and make sure that the U.S. economy remained stable, they reduced interest rates. We got the best byproduct of that in that our market surged, and we had a fantastic 2019.
So as we start 2020 now, the situation is different. We have several markets in our market, right?
Yeah, stratified.
Jim always talks about drilling down. You know, the numbers that we share with you all the time, the market is talking to us all the time.
Market's talking.
But we got to go down, drill down further, and you find lots of things.
Yeah, it's
right?
interesting because the market, a lot of people, when you talk about the real estate market, they get this like one big picture of the market. But it's actually not true. It's like talking about the Dow Jones Industrial Average. That's 30 stocks of thousands of stocks. It doesn't necessarily represent the entirety of the market. So for us, we look at the market by price band. So a good example of that is anything below $750,000 in our market, and depending, or $500,000, depending on your specific area, if you're in Ashland or Jacksonville or whatever, you would describe right now, still today, as a pretty strong seller's market. But you get over that 500, 750 mark, and it starts to change dramatically into a buyer's market. So it's really the tale of two markets in this valley. So when you're a seller, you might get the misconception because of the big numbers that you're seeing out there. Like when I say there's 3 months of supply, that applies to the overall market.
The whole market.
But when you drill down into 750 and above, there's 22 months of supply. So it is a extreme.
Well, that's almost 2
buyer's market.
years.
It's almost 2 years.
Yeah,
Yeah.
that's a long time.
But if I go down the other side where most of us are,
where most of us are.
below that figure, right? I am anyway. Below that figure, what's happening there right now then?
So it's still a strong seller's market. So you're in general
still for the seller side.
Yeah. In fact, in December, we just went through the numbers at our office this week. It's 3 months of supply nationwide.
Okay.
And that's pretty much reflective here. Even there is even some of our market that's 1 to 2 months of supply here in Jackson County. And the way people say, what does months of supply mean? And I think that's important for the audience to understand what that means. It's if every realtor stopped taking listings today, that's how long it would take to sell off our current inventory based on our sales rate.
Okay.
So that would mean in 2 months,
everything's
sold. It's sold out, right? So that's the way you look at that. So a healthy market where you're kind of at a balance point where there's an equal number of buyers and sellers is 6 months of supply. So when you hear the words or hear it's 1 to 2 months of supply, that means it's a very undersupplied market, and sellers have what we might call pricing power. That's where you start to see prices rise. And when it goes the reverse, over 6 months of supply, that's when there's pricing pressure where buyers have more control. There's going to be less offers coming in, so sellers are more likely to take a little bit lower offer.
I'll bet we haven't been in the lower price ranges above 2 months supply for, I'm going to say, quite a few years now.
Yeah, but since the recovery began.
There's such a demand for those properties, right?
Yeah, and that was always the case. That little market is the last to fall and the first to come back.
Yeah. So you see about the luxury market, then we'll start there. It's kind of tanked. I don't say tanked, but it's definitely not as robust as it was.
Yeah, it's always going to have a longer market of time because there's just fewer buyers in that buyer pool. When you get over 750, there's just fewer buyers. Right? But the difference now is that there's been a buildup of supply. So you just have a lot more listings sitting there. I think in our current market, we have about 110 to 120 listings over 750.
A lot of them.
So that means, and just to give you an example, I think last month there might have been 5 pending at that price range. So when you look at that and you say, I'm a seller putting my house in the market, you need to really pay attention to the competition because that means there was 5 buyers last month and there was 120 things for them to look at. And all over in Ashland, Jacksonville, East Medford, whatever.
That's what you call a lot of competition.
You got competition. So you need to have a really good realtor like you guys who will actually walk people through and really take a strong look at their peer group, who they're competing with. Average buyer looks at 10 homes over 10 weeks. So you have to really make sure you're dialed in. Make sure you're going to get it positioned correctly.
And if you're selling a property like that, it better be really, really nice, clean, perfect, absolute, pristine, perfect. And that's where I think some of those due diligence, where the seller does the due diligence and just provides it to the buyer up front, that can really go a long ways for you being the next one to be pending instead of the guy down the street or girl down the street.
All right. What's happening in the lower prices then? We're seeing. Are you still seeing a lot of multiple offers coming in, Jim?
It's not.
You have a lot of agents that you deal with.
It's not as many multiple offers as we might have saw like in 2015 or 2016, where you saw, 7, 8, 10 multiple offers on every single listing hitting the market. It's a different market than that, but it's still a very fast market, and we do still see multiple offers, just not quite as many. The challenge is for the market in general is we're undersupplied. So some buyers have pulled back and they're just like, I can't find what I want, so I'm just not going to look. Yeah. And they get kind of frustrated by the process of looking, especially people that are in that super fast market, which would be like 200,000 to 300,000, where listings sell literally overnight. And they just get weary of the process. But that's where you want to work with a great agent that is aware of not just listed properties, but unlisted properties. A lot of the best listings never make it to the MLS, and a lot of people aren't aware of that. And that's because the really good agents have their ear to the ground. They're talking, they're networking with their colleagues, and they're looking for sale by owners. They're looking at expired listings, things that came off the market before, and they're even canvassing neighborhoods looking for things that are coming on the market that haven't got there yet, and they actually sell them before they hit market. So that's a really big difference.
So when you're in that price range, that's going to hit you even further.
You need a good agent.
You got to be ready to go. And you got to be buyer ready. You got to be all those kinds of things, don't you?
Absolutely.
Because if sellers have choice, they're going to go with the best deal, right?
Yeah, and in that price range, we have more cash buyers, and it's hard to compete if you're getting a mortgage, because there's only so high you can go. So, we still have that situation where sometimes the cash buyers can scoop in and take that inventory off the market because they're cash.
Cash still's king with a lot of ways, isn't it?
There is
a lot of cash buyers
in Oregon. There's about, I think it's 26% of the buyers are cash. So about a quarter.
Yeah, about
a quarter. It's interesting though. There is good news. There's a silver lining in our market today. It has normalized on the pricing. We were seeing double-digit appreciation for several years, and last year the numbers have just come out. Our appreciation for the entire Jackson County market was 4.5%.
See, normal, sustainable,
and sustainable, and that was the truth for my career for 25 years. It was 5-6% appreciation. You could bank on it. And then we just had this incredible run up, and then it's like coming off a roller coaster, you had this incredible run down. But now we're kind of back to a normalization and stabilization.
It's still a great investment.
Great investment.
Let's talk about investments too. We got a break coming up here as well. So Alice is an investor as well. You guys both do that. So we'll get your comments about what you think about that. What's out there to invest in either too as well. Anyway, got a break coming up here. Don't forget you can check out any of our past shows at realestateshoworegon.com. Jim Remley with us today. We're talking all about the market here. He's the head guy at John L. Scott, Pete Belcastro, Alice Lema, and we are coming right back after this. Welcome back to the Real Estate Show on KCMX News Media 880 and YouTube at realestateshoworegon.com. Pete Belcastro, Alice Lema here with you today. And thank you for joining us. Jim Remley's joined us as well. We're all the John L. Scott guys, girls here today. John L. Scott, you've been there 10 years running the place. 2019 was a great year, wasn't it? I mean, for the two offices, Medford and Ashland.
Yeah, we did. We had our biggest year ever. So we sold $912 million in real estate, almost $1 billion.
Wow.
I was shooting for that billion, but we didn't quite get there. Hopefully 2020 will be the year. So about 25% of the sales done in the county, Jackson County, were done by a John L. Scott agent.
So how many houses was that? How many properties?
It was 2,500 properties sold.
2,500 properties by a John L. Scott person.
Yeah.
Of course, Alice had her own statistics there about the overall 2019 sales of $5.6 billion in the three counties.
Billion with a B in little Southern Oregon.
So that's just a lot of activity going on around us.
It is.
It truly is. So we talk about buyers, sellers, renters, investors, in this whole real estate market thing. Talk about investing for a minute, because I know you both do that. What's a good thing to invest in today, do you think, in real estate? What's your thoughts?
Well, I think in real estate in general, people often ask me what should I invest in. It's a natural question when you're getting a little bit older like me. They'll say, what should I invest in, Jim? Of course I'm going to say real estate because that's what I sell. But I do believe that it's the best investment you can make compared to, and I've invested in stocks and gold and silver. I'm a guy that had bags of silver in my house at one time, lost money on it all. But the reason why I believe real estate is such a superior investment is because I was telling my son this, actually, my 14-year-old son, we were driving the other day. I said, let me give you your first lesson in real estate.
Okay, here you go.
And I said, it's because everyone has to live somewhere, right?
Yeah.
And they're not making land anymore. But they can go find a gold deposit. They can find an oil deposit, and they can find, somebody can create a new company and create a new stock, or invent something and destroy your company if you're investing in stocks. But that can't happen in real estate. Real estate's indestructible, and God isn't making it anymore. Yeah. So what you have here is you've got an asset that has scarcity. And when you have an asset that has scarcity, there's only one way it can go up, and that's up in value.
So there's some value always to it.
There's an inherent indestructible value to the land. And something that people really don't understand, even people that try to compare us to the stock market, which is ridiculous. We're a far superior investment, but is the inherent value of the rental value of the property. So every property, no matter how crappy it is, can be rented for something, right? Yeah. So that means if it can be rented for something, it creates an income stream, which creates a base value to the real estate investment. That's why real estate will never go to zero. So you can't buy real estate and have this day when you wake up in the morning and you look at the paper and it says, guess what, your investment's gone to zero. Never happen in real estate.
Yeah, that's
because
true.
There's base value involved with it.
Yeah.
So there's other huge advantages too. It's one of the assets, the few assets in the country that you can leverage into, and every American can do it. And the first thing you need to leverage into is your own personal residence. Mm-hmm. The Harvard University does a study of this every year, and they look at wealth in America. The number one wealth builder in America is housing.
It's housing, absolutely.
45% of the wealth in America is built on the back of housing. So it's absolutely essential for people to invest in housing. And let me just share this with you too, that they also do a study of how much assets somebody has that's a renter versus a homeowner. The most recent study was that an average renter has a net worth of about $5,000. Yeah. The average homeowner has a net worth of roughly $222,000, or 44 times the renter net worth. So if nothing else, you buy your own house, that's what you should take away from this.
And we've got our clients, our friends who become clients with us, young couples, exactly. I've had two now, Jim, just in the last couple of months, where they're actually ended up, as we talked about it, they were renting, they hated where they were renting, paying all this money, and got into both homes paying less than what they were for renting, and it was like,
including taxes.
Geez, that's the greatest thing we could ever do.
It's shocking.
Including taxes.
Yeah, including taxes.
So that's what it's about, kind of thing. And I told them both, you start to create wealth for yourselves now today. That's really true.
And as soon as you buy that first house, here's the goal for everyone. You start buying one property a year. One property a year. We got some young people in the room watching
this.
You can do it. Anybody can buy one property a year if they set their mind to it. And you can absolutely set yourself up for wealth that way, just by buying one property a year. People often say, when you watch the pundits on TV, it drives me crazy when they compare the stock market to the real estate market. And here's the difference. If I have $20,000, so let me run this by you. I have $20,000 to invest, and I invest it in stocks, and I have a 10% increase in the value of that stock in the year. How much have I made? I made $2,000, right?
$2,000, yes.
Yeah, 10% times 20 is $2,000. I take that same $20,000 and I buy an investment. Let's say you could find one at $100,000. Kind of hard to find, but let's say you could. And that property goes up in value by 10%. It's gone up in value now to $110,000, right? Okay. 100,000, 10%. It's gone up. I put 20%. I put my $20,000 down on it. But now I've made $10,000 on my actual $20,000 investment because through the power of leverage, I've made a 50% rate of return on my money. That's why there's so much power, is because you can leverage these dollars. And you really can't do it with stocks or anything else. No. I mean, you really can't. And in a really simple and easy way. We got so many vehicles we can invest in with real estate. I
wish I would have listened to my father telling me he should buy property back in the day,
You only have to be 18 years old.
That's right, 18.
And if you cannot do it yourself in the beginning, it's a great time to approach friends and family that you love and trust, and make some kind of a partnership, all written down with the lawyer, of course, and split the equity. And that's a great way to do it.
Absolutely.
Yeah.
We had such a wacky year. What was your impression of the rental law, the rent control law that went into effect? Alice she has seen some of her clients.
I didn't think they were actually going to do it.
Me neither.
But she's seen some of her clients sell. So what is your impression of what happened? Or what's happening?
First of all, it's a ridiculous law, and it will backfire in the end. There's been numerous studies done on rent control, and rent control never works, and it's a ridiculous law, and it should not have never passed. So that's how I'll start with this. But my wife actually owns Sterling West Property Management, Danielle Remley, and she manages 500 doors, and they definitely saw some people exit the ownership cycle.
Sure.
So and you think about this, how this impacts the renters. I mean, the poor renters. What's happening and what we're seeing right now is a lot of people, because of SB 608 and rent control, they've just exited the market, and so they put the house in the market, and now that's one less rental for them to choose from.
Yeah,
it actually drives up overall rental
prices.
Well, it's supply and demand again. We have so many displaced tenants now, more so than we did a few years ago, and now the landlords are alerted to the limit of rent that can be raised every year. So now they're all raising their rents, where they were kind of sleepy and happy with the tenants they had, and they weren't really raising the rents very much.
It focuses everybody on how much they can maximize the rent increase. So it's forcing everybody to raise rents by 10% a year. And what will happen is that will continue as long as possible for them, because they can't afford not to do it. Because if they don't do it one year, they can't catch up the next. So it's this vicious cycle that goes into effect.
Have you seen the effects of people? If you've been in a property for more than a year, I think it was, you got to have 3 months notice. Has that been a problem with real estate, or how has that been handled in your world?
Well, it is a big problem, because if I own a rental property now and I say, hey, I want to sell this property, I have to, before you could give that tenant notice and they could exit the property, but that's not the case anymore. So you can, if you enter into a contract with somebody that has the intent of moving in themselves, and you're not in a lease, then you can give the new owner, or the renter, 90 days notice, but you also have to pay them 1 month of rent in addition to that. But if the person that's buying the property is an investor, they are forced to keep that tenant. There is no, evicting that tenant for any reason. Unless, there are caveats to that, unless you're going to do some remodel that makes it uninhabitable. But they're cracking down on that. I mean, it has to literally be uninhabitable. That means the kitchen's destroyed, the bathrooms are unfunctional. I mean, it's a big deal.
And remember, the 90 days starts, you have to show the tenant that you've got actually in contract. That's when the 90 days starts.
So there was a big issue about that, about showing the tenant the actual paperwork, from the transaction. So how is that being handled?
We haven't seen it tested. I don't think any tenant in our office yet has demanded to see it, but I think we would probably have to produce it if so.
So
a redacted version,
redacted version to show them the whole thing, just that it's in contract. Hemp in cannabis in 2019. My God, I hope some of you saw that the Tribune had an article this week. It's all over about the just kind of collapse of hemp prices that have occurred. It affected our real estate market. Cannabis and hemp did. What happened, do you think? What did we just see?
Well,
what are we going to look to?
It's very interesting what happened, because you and I talked about this a couple of years ago when the cannabis hit. And you had this green rush of everybody buying all this agricultural irrigation land. And these farmers really hit it rich. If they timed it right, they did well, right? And then we all predicted it. We could see it. It's like you could see it on the horizon. Here's what's going to happen. You're going to oversupply the market with pot in our area. I just read an article that we are per capita have the second most pot stores per capita in the country, right here. That's Medford, Oregon. Second in the country.
The city of Medford, who was going to ban everything not that long ago, has the most cannabis stores in the
second most.
Second most.
So I mean, incredible. So you see this collapse happening. You know it's going to happen. You can see it happening, and sure enough, it happens. But right behind it, then you have hemp. And everybody thinks hemp's going to be the savior, and hemp's going to fix everything, and there's a worldwide market for hemp. Well, guess what? It got oversupplied too, and it's just history repeating itself.
Oversupplied, and much of it destroyed here.
Right. Yeah.
That's the sad part here. Even that so much of it was destroyed, and so many people lost so much money. And now, if you drive around and see some of these fields, look at the condition of some of these, which were beautiful hay fields. Many of them now are just globs of mud, a runoff. Stems, it's a mess.
I was talking to a producer, a hemp producer, And we went to lunch the other day, and I said, okay, explain the whole thing to me, man, because I don't get it. So we went through the whole process. But what's really interesting about hemp is a lot of people got into it thinking they're going to get rich because they're just like, oh, this is like,
I can grow this.
I can grow this weed.
It's a weed.
It's a weed. Right. It's so easy to grow. But there are so many nuances to it. And just one of those nuances is, your THC level can only go to such amount. And once you get to such a, and it's tested, once it gets to this amount, it's called a burn off. You got to burn your field. If you hit this limit, right?
Okay.
Yeah. So you got a guy that's put all his life savings into this field. Spent $20,000 an acre to get this thing produced, and then he accidentally, because he doesn't know what he's doing, allows that THC limit to get above, so you can get some kind of high off that. Burn the field. That's the rule. That's the rule.
Now, remember, you could dry hemp, but you got to put it in the plastic bags. But if you don't take 22 pounds per square inch, it will rot. Yeah. And that's what happened to bags and bags. It was a mess, and it's affected real estate. How it's going to do rural properties this year, I don't know yet. It's still up in the air for me. There's
a delay. What happens is, just like the pot, there's a delay in it. There's still people out there that still think they're going to get rich in it. We haven't seen the complete crush of it yet. I predict we'll still got another year before people will start to say, wait a second, maybe I shouldn't do hemp. Maybe this is a mistake for me.
And I bet rural landowners are going to be more aware of before I lease to somebody.
Yeah, I'd say if you're a rural landowner, put it on the market and get it sold to
somebody. That's right. Call your realtor.
Call your realtor. Right
yeah.
All right. Well, we got a break coming up here. One more segment to go. We're with Jim Remley today from John L. Scott here on the Real Estate Show. Pete and Alice, we're coming right back here to KCMX and YouTube right after this. Welcome back to the Real Estate Show and KCMX News Media 880. Pete Belcastro, Alice Lema with you today. And thank you for joining us. February the 1st is our show date for this one, and already into February.
It's going by fast.
You've been doing what? You've got a little everything going on.
Yeah, I think we have a nice mix of investors that are getting out of the business because they don't want to deal with the new laws. But there's also a brand new crop of investors that do want to be in the business, and I think they're getting some pretty good deals. So that's pretty exciting. And then we have first-time home buyers coming in droves because right now the interest rates are so low, they never would have had a chance if things had gone the way they were last year at 5 and 6% interest rate. So people are really scrambling around to get a place. Well, it's exciting.
And real estate is really interesting for supply and demand. It really is a supply and demand business. You hear that all the time in economics classes, and I think real estate's a classic example of that. Jim Remley is with us as well. He's the managing principal broker at John L. Scott, the Medford and Ashland and Eugene offices, and had a great year in 2019. What do you think? We're looking ahead here now a little bit. What do you think is going to happen?
We actually got 2 new studies from some of the biggest groups in the country that study what they think is going to happen with the market. It's kind of interesting. First of all, home sales are projected to grow in 2020, so we're going to see more home sales.
Even though people are staying in their homes longer. We've talked about that part of it.
10 years gone up, so the length of time somebody stays in their house used to be 6 years for years, decades.
Yeah.
It's climbed to 10 years. I predict it'll go to 11 or 12. Some of that is related to how low interest rates have gotten, actually, because people get this low interest rate at 4 or 5%. And people forget, I was going to point out something, that interest rates for over the decades, just real quick, because you guys brought this up, 1970s decade, average interest rate was 8.8%. 1980s, average interest rate through the whole decade is 12.7%. 90s is 8.12%. But even the 2000s, which wasn't that long ago, 6.29%. So we're living in a time where we're seeing 40, 50-year lows of interest rates, right? So what happened with, and the reason why people are staying in the home longer is because they've finally locked in the super low rate. Like, I'm not going to give that up. But now, right in this year, we are hitting lows, 7-year lows for interest rates. So when you look at an interest rate right now, which we saw this week of 3.5%, you know why it went drop to that, by the way. Brian Case at Guild Mortgage told us. It's because of this new flu virus that's going around, scaring the markets. It's scaring people, and they're thinking, is there going to be a pandemic? We don't know. But that pushes people into bonds, which lowers interest rates. So you never know what's going to affect the real estate market. You would never think the flu would affect the real estate market, but it absolutely is, which is fascinating. So looking at interest rates, I think that's going to be the biggest impact going into the year. So the number of sales is predicted to go up. From about 5.5 million to about 6 million units sold throughout the country. I think we're going to see that here locally as well.
Part of the problem, let me ask you this question. And Alice and I talking about this part, is that where do people go? If the inventory is low, and if 60% of our market are people move up and down in our own market here, to me, that's going to be the drag on this whole thing unless we get a lot more inventories. There's no place for people to go, right?
It's
Does that make sense?
It's a self-fulfilling kind of weird prophecy that happens. It's a cycle, because what happens is if Pete's sitting at home and he says to himself, "Boy, I'd love to sell," your first inclination isn't to call a realtor and list your house. Your first inclination, psychologically, is going to go
find
to
someone.
Find
another house.
You're going to search. You're going to go on John L. Scott's website or Google or Zillow or Realtor.com, and you're going to start searching for a house. And if you can't find what you want or something like what you want, you might say, "Well, we'll just wait." And that's what's happening a lot with sellers right now. Is there's seller reluctance in the market, hesitation. Not that they don't want to sell, because people that have been in their house 10 years absolutely want to sell. They are sick and tired of being in that house, right? But they're afraid of taking that next step. But there are ways you can deal with that lack of inventory. I know Alice has some ideas on that too.
Yeah, I'm actually writing an offer on a for sale by owner today.
Awesome.
Yeah.
You are? Yeah.
Yep.
Right. What about double properties, duplexes, and things like that? Are those out there for people? You think, are they still there?
Duplexes, you bet. Yeah, there's lots of duplexes, triplexes. Because of SB 608, we're seeing a kind of a resurgence of inventory in the multifamily. We didn't see a lot of multifamily, for a long, long time, but you're starting to see more of that because people are exiting the market. So that there's an opportunity there.
Well, and some of them are re-racking their portfolios because the interest rates are so low.
Exactly.
They can sell their duplex or fourplex and buy a 10plex.
Baby boomers like myself and others, where are we going to go? That's a problem.
Yeah.
There's no, and I think one of the big pulls coming around this market is that it amazes me how many people are moving here to be either closer to their children or to their folks, or how many leave to go be closer to their children or to their parents somewhere else.
Interesting.
Man, that's a huge part of the market. If I was doing research for a master's degree, I would love to do research on that, because I think it's immensely huge.
Atlas Van Lines just put out a survey, and they listed Oregon as the second biggest influx of people moving to Oregon than any other place in the country, any other state in the country. Second only behind Idaho, which is crazy, right? But we've been on that list multiple times for people wanting to move here.
For a long time, too. Actually, it's been like the last 10 years we've been on that list.
Idaho's an affordable place to move to.
And so is Oregon. On the West Coast, which is highly desirable, the whole West Coast, Oregon, and specifically where we live, right here in this valley, where we have more of a California climate, but we've got the mountains, we've got skiing, we've got culture, we've got everything. We've kind of got it all right here in this valley. It's kind of an amazing place to live, and it's super affordable. When you compare our pricing to Seattle or LA, it's incredibly affordable, and a big driver. But circling back to Pete's at his house. Yeah. He's afraid to put his house on the market. How do we deal with it? As a realtor, I want to point something out. So my conversation with you, Pete, would be totally hear what you're saying. So here's what we can do. Before we put your house on the market, I want to treat you as a buyer, because I'm aware of properties listed and unlisted. And you're only seeing the listed property. I can have access to something you're never going to see, which is unlisted property. Let me find some of those for you. Second thing we can do, if you have enough equity in your house, is instead of putting your house on the market, you could actually do an equity loan, a HELOC, a bridge loan, some people call it. We could go find you a house before you ever put your house on the market, so you're not homeless, if you have enough equity. And the third, and one of my friends, Dee Wittenberg, just did that. Sold a little farmhouse, did that. She's also a realtor, great realtor. And the third thing you could do is we could put a contingency on your listing. Not ideal, but better than nothing. But the contingency is that if we're not going to close on your house until we find your replacement housing. So when you work with a great realtor, you can overcome the supply issue, but you got to have a great realtor.
And you have to have multiple strategies too.
And I wish in new construction we had more alternatives instead of just 2 houses around for alternative
let's
housing.
talk about that.
2-bedroom houses. They're coming back, by the way, and smaller houses are coming back big time. But I wish we built more of those around here. That's my only complaint is that we don't have anything really small and alternatively around in housing for people who want that.
But what about that other new law where they're starting to let you put up to 4 dwellings on one tax lot in a town of 25,000 or more? What do you think is going to happen with that in our valley?
It'll be interesting to see how they adopt those exact rules. But the way that those are set is that if you have a property that's zoned to only have one residential house right now, the new law states that property will be able to be turned into multifamily housing, basically, and you can add more dwelling units per acre, like Alice is pointing out. But that won't apply to places where there's CC&Rs. So if there's CC&Rs, those CC&Rs still trump that.
So we thought it was the other way
No,
around.
CC&Rs will still trump that. So you can
They
still
will
have
trump that.
Yeah,
Okay.
yeah. You can't just. I mean, can you imagine going into like where some
Eagle
areas?
Point Golf Course was my.
That's where I live.
Or
So I can't imagine that you're starting to see duplexes. It just wouldn't happen.
Well, we'll see if it happens. So far, we have the planning director in here, and nobody's applied.
Nobody's applied
for that yet.
Well, but
So,
I just talked to him again because I call all the time, and they said they're not even going to talk about it for another year.
They got to make the rules.
They have a long way to go, and then there'll be public hearings and things like that. So it'll be very interesting. We have people that will probably do it.
Oh, it's exciting.
They have big lots, or they'll tear their house down and put in 4 smaller ones if they can.
I think it's needed. I'm not 100% against that.
No,
as long as
either.
you protect the CC&R properties, because you need to. But outside of that, I think we need to find unique ways to build more affordable housing.
Well, and then you could have those smaller houses you were talking about, Pete.
Well, at least government's talking about it more this year in 2019. Hopefully, it's going to continue in 2020. We see some improvement with it.
Yep.
We've come a long way, but we're still got a long way to go to meet the housing need here in our own communities. Here, Jackson, all 3 counties are really in that kind of same boat. We're out of time. We got to go. So before they cut us
we
off,
talk for 3 more hours.
We could go on for a lot longer than that. Jim, thank you for coming by.
My pleasure.
Yeah, thank you so much.
Best of luck to you as you go. Year number 11 for you, my goodness, and Alice as well. So we'll see you next week. We've got another great show next week for you, so stay tuned with us as well. Thanks to our crew here, Brett Nance, for his help and support of today's show, and
Gavin.
And Gavin as well. We'll see you next week. Have a great week, everybody, and God bless you all.
Thank you.